I've turned a $39,000 deposit into a $14 million, $17 million real estate portfolio. And here is my portfolio. Here we show this, and it's very, very important. It's all about building wealth over time. And by holding real estate, so you can see the current market value of my portfolio, just over $17 million. But the key thing is there's mortgages on those properties. In 30 years, all those properties be paid off. And that means I'll have a portfolio worth $42 million. And that those mortgages have been paid off by the tenants that have lived in the property. And I will have a net worth of 42 million in those 30 years. And that's the value of owning real estate over time. You don't just want to buy real estate and then look at selling it a year after. It makes absolutely no financial sense. You're not going to build any wealth. You might as well play the lottery, and Kyle will talk about that more. But that you want to buy and hold real estate over time. Next, I'll introduce Kyle. Kyle, why don't you tell them about yourself and holding real estate over time and why you shouldn't play the lotto?
Well, playing the lottery is fine. Just play within your limit and don't plan to fund your retirement like about a third of Canadians are actually planning to do. So, hi everyone. My name is Kyle DeVigi. I'm a real estate broker, and I'm licensed in Ontario and in Alberta. I've been an investor in real estate since 2012, and I now own 7 properties across Canada. I have those lottery statistics because in a previous career, I used to manage Lotto 649 and Lotto Max on behalf of the provincial lotteries. And there I found that so many people were gambling on their future, trying to win the lottery versus making smart investments like in real estate over the long term. So I switched careers about 5 years ago now, and last year alone, I helped over 190 people from across Canada to invest in pre-construction properties in Calgary. I've been inducted into the REMAX Hall of Fame, but one of the things I'm most proud about is that I turned one deposit of about $38,000 into a real estate portfolio worth well over $4.5 million. It did not happen overnight. It took time. And Alex, if you want to go to the next slide, we can take a look at what my portfolio looks like today. It is primarily pre-construction condos that I bought before construction. And there's not a lot of secret sauce here, I invested in great investments. At that time, I was using Alex as my agent to get, really solid investment advice. And it really paid off. I learned so much from Alex, and I help my clients do this now as well. And was able to leverage those initial investments to take out equity, refinance the mortgages to then go buy additional properties, rinse and repeat. And now you can see I have a pretty significant portfolio, and I want to continue adding on to this. My only challenge is I have 4 properties closing in the next 18 months that I have to get mortgages for. So starting to stress out about that. So need to start looking out longer term. And Alex knows all about that, but I won't get him going on.
Oh no, no, I'll tell everyone here.
The rabbit hole.
Oh,
You got
no,
it.
no.
no, I won't go into it long, but I just got 6 mortgages in 120 days. Wasn't fun. It wasn't fun. It wasn't fun at all, but I did it. Because the key thing is that you don't want to sell things in a down market. So why would you sell something in a down market? And the analogy I make with people is that, well, are you going to sell your RRSPs right now and cash out your RRSPs? I'm like, no. The stock is down, and if I take out RRSPs, I'm going to be taxed on. I'm like, then why are you going to sell the real estate in a down period? You buy, you hold it. Things go like this, but they're going to go like this. So you buy and you hold it over time. And a great example I'll give, and Nish, you're a testament to this as well. When we sold the York townhomes, when did we sell those townhomes?
2021, May,
2021.
June.
So we sold those in 2021. Those were in the high 300s. And when they closed, they went up. They went up in value. Probably they were selling right after closing around $420,000. But people were like, "Oh, I want to sell. I want to sell." So when you factor in realtor fees and all that kind of stuff, maybe you made $5,000 on But if you held on to that one additional year, so though we sold those in 2021, people got those in late 2022, summer 2022, fall, and then winter into 2023, people were getting those. If you sold them, let's say relatively immediately, maybe you make $5,000. Those were selling for this fall over $500,000. So you could have made $5,000, or you could wait a year and then been a more tax advantageous situation, because now you have to hold a property for 1 year to get capital gain. Otherwise, you have to take all profit into your income. You hold it for one additional year. You've made over $100,000 additional dollars just by holding it 1 year. Now that pricing's come down a little bit because we're in the winter seasonality. You'll sell those for around $480,000 right now, but they went up to over $500,000 in the fall. So if you just wait and time it and don't panic sell, you'll make six figures. And I just want to stress that to people. And Mr. Calgary is next. So and the Yorktown home was his first investment in Calgary.
Yeah, no, thank you so much. Welcome, everyone. My name is Nish Desanayaka, and I rearranged my points here earlier today, and I'm going to talk about my accolades later, not only because they're nowhere near these two other gentlemen that spoke before me, but I really wanted to lead with the fact that I've invested in 7 pre-construction properties in Calgary. I own 2 in the GTA, but really the emphasis on this first point is, as a team, we are walking the talk. We're not simply advertising properties and selling them to people without having a vested interest ourselves and putting our hard-earned money into that market, just like we're asking you to do. So that is really what I wanted to start off with. Now to a bit of my background. I've been a licensed realtor since 2020, end of 2020, and working with gentlemen like Alex and Kyle and just, some other really great realtors. I've been lucky enough to be voted as, the top 1% of realtors for sales over the past 3 years out of over 73,000 in the Toronto Real Estate Board. My first investment was in Toronto. It was in 2006. And since then, I've added on, as you can see, and I'm inching up on, I think, almost 200 pre-construction properties sold in Calgary over a longer span, over almost 3 years. And that's in addition to my successful resale business in the GTA. Prior to jumping into real estate, I was in a completely different industry. It was a family friendly entertainment industry. I worked there for 22 years, and we were an industry that got really hit hard with COVID. We actually had to file bankruptcy, and this was an international company that I worked with. And the reason I bring that up is we will be talking about taking your retirement into your hands, especially the financial component of your retirement. And by investing in real estate, this is one of the best ways to do that. We'll talk about our individual journeys, but I wanted to put out that teaser in advance. So as we move along through this presentation, we'll kind of chip away at why it's important to look at real estate as a way to create generational wealth for you and for your family down the road. Now, looking at my current investment portfolio, you can see starting in 2006, the second property was in 2017, both in the Greater Toronto area, but the remaining 7 have been in Calgary. And the current value today is just over $5 million. And over the course of the next 30 years, again, with mortgages, at a very, very conservative rate of 3% year over year appreciation, I'm looking at about a $12.5 million portfolio. And currently we have 2 of these properties that are tenanted with renters, and fingers crossed, I might be looking to purchase another one with upcoming project that will be closing in 2029. So that's breaking news for everybody, my wife as well. So let's see how that turns out.
So let's talk about what happened in 2023. And I want to go over this slide here. And this is Nish shared this morning, and numbers are what matters. And when I look at the numbers, it's quite striking in regards to when we look at the Calgary market, especially when we compare it to the Toronto market as well. When we look at the Calgary market and we look at pricing, the Calgary market, for example, in detached homes, they went up nearly 15% last year, where in Toronto only went up 2.4%. And that's with our high interest rates, which we were experiencing all of last year. Semi-detached went up 7.6%. That went up only 1.4% in Toronto. Townhomes went up 18.7%. Niche has got two of those. And in in Toronto, they only went up 1.3%. And condos went down in value in Toronto, went down by 3.3%. Condos in Calgary were up 10.7%. And they're even seeing more steam right now because we saw some big jumps of 16, 17% trending towards the end of the year in Calgary. And why does that happen? We saw this happen in Toronto as well in 2014, 2015, and really in 2017. But is that when you start looking at the price point, the end price point of your freehold property. So for example, when I look at the end price point of the detached home in Calgary, well, that's over $700,000 now, $733,000, the average price of a detached home now in Calgary. In Toronto, it's over 1.4 million. Well, what's the average price of a condo? And again, when we talk about condos and you're looking at pricing, there are a lot of older 40-year-old buildings that really bring down that pricing. So in 2023, we're looking at the average price of $313,000. But that shows you that detached houses are just over double the price of condos. And when you see that happen, now you start to see the catch-up game, because people are like, well, I can't afford to get that detached house. So then they start moving into condos. So we're going to see outsized jumps of pricing continue on condos because they've been down for so long. And I said the same thing in 2014, 2015 in Toronto, when the gap started growing between detached houses compared to condos, and people are like, well, the growth is in the detached houses. I'm like, yes, but condos are going to catch up. You just have to give it time. And condos are a lot easier to manage than the freehold properties. So that's where it's important to look at where the growth is going to be. And the growth is going to be in the condo pricing coming up in 2024. Sorry, we went back a decade in Toronto, 2024, 2025, 2026. We're going to see that growth in the condo pricing because that's where the affordability is going to be for that first-time buyer. But also B, when we look at that first-time buyer, they want to live in condos. They don't want to jump right into a house as well. And that development's been really lacking over the year because, again, that 313, which may seem low to people, but that's including a lot of 40-year-old older inventory because they just started building new condos again in Calgary, which have been promoting to everyone, hey, buy. This is a great opportunity, especially when you compare it to the benchmark pricing of Toronto, which is $682,000 for a average price of a condo in Toronto. Now, Nish, Kyle, do you want to add anything on that?
Very quick. In addition to the condos, it's striking to see the pricing difference. It almost looks like every single category, the Calgary market is half or less than half the price point. So when we talk about first-time home buyers, we're talking about investors, people that are moving to Canada, out of the country, still having money to spend to buy property and wanting to live in a major city that has all the amenities. Man, it's very, very, very attractive to look at a city like Calgary and own a home and still have the disposable income to have a high quality of life.
Exactly. It's the affordable option for people. So let's go to the next slide. So where are we headed for 2024? No change on interest rate as Bank of Canada, 65%. That was our latest news that just happened in January. But we are predicting rate cuts are going to start happening in 2024. What does that mean? Well, when people start getting cost certainty back in the market, and there are a lot of people on the sidelines, specifically that first-time buyer that A, has been waiting for rates to come down, or B, they just haven't been able to qualify for a mortgage to get into the market. Now they are able to get into the market. And then the second demographic is that new Canadian, typical someone new to Canada. They're going to rent for 1 to 2 years, then they're going to buy. Well, we've had record levels of immigration coming into Canada, over 500,000 people a year. And all those people are renting on the sidelines. Now they have the savings to buy their first properties, and they're going to be entering the market at the same time when rates are starting to come down. So you have this double cohort of buyers, of new Canadians, as well as first-time buyers that are going to be entering into the market. So will 2024 be a good time to invest? Yes, but obviously some markets are better than others. And when you look back, let's just go back to our pricing right here in Toronto versus Calgary. Just when we look at that affordability mark, that's where we see still huge growth potential in Calgary. We're gonna get into the data over the next 20 years. Huge growth potential in Calgary. When you look at Toronto, I actually see opportunity in Toronto, but just not everyone can afford to invest in Toronto. And even if interest rates go down, your rents aren't going to cover your costs. You're going to be a cash flow negative situation in Toronto, and you're just relying on appreciation. So there's going to be opportunity in Toronto to make appreciation. But if you're that real estate investor that looks at traditional metrics in regards to what's my population growth, what's my opportunity for appreciation, and will my rents cover my costs for my mortgage, my property tax, and my maintenance fees, that's where there's big opportunity in the market. Okay, so why invest in Calgary? Well, we've seen Calgary. When we started looking at Calgary in 2019, we saw a great market that was undervalued, but we didn't really know much about Calgary. Wanted to start exploring it. So when we started doing research, we found out it was voted one of the most livable cities in North America, ranked as one of the top most livable cities in the world for healthcare, culture, education, infrastructure. It's been ranked on the Economist Intelligence Unit's Global Livability Index for the last 10 years. There's ample green space and national parks, and it is one of the most affordable cities, not only in Canada, but in North America. It's the second most affordable city in Canada and ninth most affordable city in North America. Oops. So when we look at now, so we figured out it was a good place to live, but what about the population growth? Well, the population is growing in Alberta, and it's growing the fastest in Canada. It's from two different sources. You have international population growth, and you have people leaving other provinces due to affordability and moving to Alberta. And that's where we're going to see, and this is Stats Canada data, the population in Alberta is going to grow by 48% and will be larger than British Columbia by 2043, versus the Ontario population that's set to increase by 24%. And when we look at the growth in Calgary, which is the economic capital and the population capital of Alberta, it will grow by an outsized portion of 62.5% over the next 20 years. So if you're investing, you want to go where the population growth is, because we are in the business of investing in roofs over heads. When we look now at the economic side of it, they also have money in Calgary. So our top three, Toronto, Montreal, Vancouver, they have the largest economies, but right behind that is Calgary. And when we look at that growth, it has a larger economic footprint than entire provinces, and then the entire province of Saskatchewan, the entire province of Manitoba. A huge footprint for growth in regards to the economic side and also on the population side. And we see that not only is Alberta going to lead Canada in population growth, but this is the growth of the economy over the next 3 years. So it's going to lead Canada in population growth, but it's also going to lead Canada in economic growth as well. It also runs positive surpluses in their budget. So unlike Ontario or the federal government, where you see deficits run every year, so they're increasing to the debt load, Alberta is actually paying off its debt. It's running surpluses. So the Alberta's had a positive surplus last year. I believe it was over $13 billion. And then this year, they're looking at a $5.5 billion positive surplus in the economy. What do they do with that? They pay down their financial debt, their existing debt. And they also already, before these surpluses, they already had the lowest net financial debt in Canada. But on top of that, they are able to do things like there's no provincial sales tax. They have the lowest corporate tax rate in Canada. There's no land transfer tax. There's no development charges. These make it an attractive place for not only us to invest, but also for businesses and also individuals to move to that province, which then again leads to population growth, which then again helps us increase rents on our investment properties, but also will help increase the appreciation of those properties as well. So a lot of the times when we talk about Calgary and Alberta, people are like, well, what happens if oil and gas go down again? Well, we want to let everyone know they've diversified away from oil and gas. And I'll let Kyle talk about the economics of Calgary and how they've changed.
Yeah, and this is one of the most common questions that I get from people, because historically Calgary had been live or die on the price of oil. And that was, pretty much true up until about 2015. That's the last time that oil went from one of the highest points it's ever been, crashing down considerably. And you saw a gutting of the oil industry in Calgary, massive amount of people leaving the city, no investment in there, and you kind of had a dead 5 years. And is completely changing the situation. Yes, oil and gas is still going to be important for the city overall, but you haven't heard of a single new oil sands project announced in what, 5-10 years? These are $10 billion investments that take 10 years to build, and moving towards green initiatives, renewable energy. I don't think you probably will see another oil sands project. They're going to continue to pump oil from the ground wherever they can. But I don't think you're going to see massive expansion of the oil operations, which is good news for the city overall, because you haven't seen a huge run up in people hiring in companies there. So oil, yes, it will inevitably go up and down, but the city is much more insulated because you didn't have entire new operations hired that then need to be disbanded. They've hired a few people here and there, but nothing significant. So the damage is already done. They've already worked through this. So now I think Calgary has the perfect opportunity to continue to build on that platform moving forward, because many of the technologies that you use in oil and gas are applicable to other industries. And this is what we're hearing from businesses that are moving their operations or setting up operations there, is that Calgary has a very highly educated workforce in a lot of the technologies that you need nowadays, in STEM, science, technology, engineering, mathematics. And you're really seeing this technology startup environment going. You have over 400 tech companies now there, and they're kind of like an incubator state. You're getting all these small businesses, and heavily attributed to that very educated workforce, but also very low cost office space. Pricing in downtown Calgary is about half of Toronto, about a third of what it costs in Vancouver. So with these startup companies, this is very attractive for them. And now, as you go to the next slide, you're seeing that they're starting to have a lot of success. Now, we're missing the titles on these slides, but these are billion-dollar valuation companies that have come out of Calgary. These are the unicorns. And you might have started hearing some of these, Neo Financial. I see them in malls now trying to recruit people for their financial products, and other big companies. And when the founders of these companies, they hit the billion-dollar status. They have money. They want to start investing in their friends' companies, their colleagues' companies. And that starts to snowball, and you really start to get that environment. And that's where we're at now in Calgary. Next slide, Alex.
Yep. There we go, guys.
And outside of those tech companies, these are the big companies that get me really excited, because when you have multinational, other 100 million, billion, trillion-dollar companies setting up shop, that gets me really excited. Amazon has tripled down in Calgary. They have the regular distribution center. They have the first bulky warehouse center in Canada, and an Amazon Web Services that they're building there as well, multi-billion-dollar development, only the second one in Canada. All of this being located in Calgary. They are tripling down on Western Canada and the Calgary marketplace. And then TELUS, built a brand new headquarters in downtown Calgary, investing billions into the province. WestJet made the Calgary airport their international hub for all of their flights, only 4 of those across Canada. So Calgary is starting to get that international appeal and desirability that it may not have had historically. And that gets me really excited about the future. But then smaller companies outside of oil and gas, outside of technology, the Haviland, they're an aircraft manufacturing company located in Downsview in Toronto, but that land got sold for them. That's being developed into housing. They're moving their entire operations just outside the eastern boundary of Calgary. It's going to be a 1,500-acre development, new manufacturing plant, new runway, new school there, like a university for pilots and training, a museum even. It's going to be a massive, massive development. And then you have the stalwarts of the industry as well. Or sorry, these are the tech companies like Infosys, Emphasis, SideTrade. These are all big companies, some of them out of India. And what gets me excited is they've had operations in Calgary. They continue to grow those operations there. It's proof that it's working. And then big financial companies as well are setting up operations in Calgary, really becoming their Western Canada hub. Same with IBM. One of the common traits is they're setting up for innovation. Because of that educated workforce, they're able to do things in Calgary that they may not be able to in other cities, and at a very affordable rate for them too.
So what's coming in regards to Calgary? So we're getting into 2024. We have our upcoming, we have our current projects. We have our upcoming launches as well. We're also going to open this up to Q&A. So if you do have any questions, ask them down below. We'll address all questions that are asked. But I'll let Nish talk about our current projects and what's upcoming, and hint, one of the ones upcoming and Nish is very excited about and considering adding an 8th Calgary property to his portfolio.
There we go. Yeah, so we have a ton of opportunities out in Calgary at the moment, and these projects range from single-family homes where you can have a basement development, so that's a legal income suite, all the way to your condo market, either high-rise or even the low to mid-rise condos. In the downtown core, we have Imperial Condos, fantastic luxury building, great incentives. This closes in 2028. We also have in the Northeast, we have the Mine Condos. Sorry, the Mine Condos in the Northeast. These are 5-story condos. There's a few buildings. We still have ample units available. And then in the Southeast, we have Mine Condos, very similar to, Southeast, we have the Orson Condos, very similar to Mine. And the price points are quite similar. Then heading over to the freehold market, we have duplexes and single-family homes at Rangeview. And all of these projects, they come with either 5 or 10% down payment options. So it really allows you to get your foot in the door for those first-time investors. And for those that have the capital to put down 10%, there's a ton of great incentives available with a 10% down. And then also heading over to the adjacent city of Chestermere, we have some options there as well still, from townhomes to duplexes. They close in the next year to 2 years, but we also have projects that are closing out in 2028 and 2029. So excited to talk to everyone about those projects. And as Alex mentioned, our newest project, which will be launching in a couple of weeks. So we have some sneak peeks of that project. It's called Lincoln, state-of-the-art building. Some of the information shared yesterday was just out of this world. I'm excited to see exactly how it looks like and what the marketing material also will be for those projects. But it is one of those, I want to say, highlights to the skyline of the Calgary market, and definitely worthwhile considering. It's a luxury at its best and also comes with fantastic incentives. I think it's what, 21,000 square feet of amenities.
21,000 square feet of amenity space. It's gonna have a beautiful brushed stainless steel exterior that'll be in gold along the sides of the building. Penthouses, two penthouse floors already sold, 5,800 square feet. One individual bought both floors. It's going to be a spectacular building, focusing on slightly larger floor plates as well in the building, which will really cater to that professional that's looking to live downtown Calgary. Really a crown jewel of someone's portfolio that's looking to invest in Calgary.
One of the other things, Alex, that I see them resurrecting is a 3-year rental guarantee with 3 years of free condo fees and 3 years of free property management. This is what we got back in 2021, and then they dropped it to 2 years. So that's very, very enticing, the 3-year option. So come 2029, you really have a hands-free turnkey solution until 2032. So 8 years if you purchase today.
And we're going to specifically have a webinar next week on this project. So we'll share floor plans, images of this project, a higher end building that they're going to be building in downtown Calgary.